Today, we're going to be talking about shit that will get you audited. You'd be hard pressed to find someone out there that's willing to argue against the idea that taxes are complicated, because it is. There's a reason why most people dread it every year during April, during tax time, every time April rolls around. Making mistakes is common, yes, but it's also critical to understand that not all issues are created equally. In fact, some of the most common tax mistakes that I'm about to go over with you in a minute are more than just a small problem. They could actually land you in trouble, a lot of trouble, with the Internal Revenue Service if you're not careful on these things that I'm about to go over with you. And I'll also explain why you should avoid at all costs. So let's talk about tax fraud. What is tax fraud? As the term implies, tax fraud is a deception. It means that it was deliberately practiced when you were filing either your state or your federal income taxes. So, in other words, making a mistake that ends up saving you money or putting you in an otherwise beneficial situation is one thing, but withholding information or filling out those forms incorrectly and knowingly to get those same benefits, that's something entirely different. That's fraud. Some people, I know you don't do this, not y'all, not my fans, but some people file exempt every year to prevent having federal taxes withheld from their paycheck. That's fraud. You're going to receive that letter in the mail too. So what happens if you commit tax fraud? It varies. It depends on the severity of the situation. Generally, you could get assessed a penalty of up to 75% of the amount that you failed to pay due to the fraud in question. Likewise, seriously, you could get fined up to $100,000 and be subject to 3 years in federal prison. It's not worth it. So let's go over some of the things that you need to be aware of. Improper child tax claims. This child tax credit is a tax break meant for families with qualifying children. That money can be used for food, clothing, housing, or any other essential items. Qualifying is certainly the operative word in that sentence. If your family, your situation doesn't meet the criteria, you don't qualify and you can't claim that credit. Point blank, period. End of story. So make sure that you qualify and make sure that those kids are yours, not other people's kids. Okay, another one is failing to report in all your income. That's a really big one. This issue has become increasingly common over the last few years as the gig economy, like the Uber or the Instacart, it's becoming popular. So someone might fully report all the income on their that they make on their 9-to-5 job, but they somehow don't add the other income that they get for those side jobs. You know, Uber, Instacart, all kinds of extra income. Or somebody might sell stuff on eBay. You know, you set up an eBay store and it generates a substantial amount of income, and you think that you don't have to report that income because you don't have a 1099 that was issued. You still have to report that income. If you don't and you're audited, IRS is going to find out. Another one is claiming improper tax deductions. A common example of claiming improper tax deductions is the home office deduction. That's a really popular one. Some people might measure their home office incorrectly or on accident, and they come out with a larger surface area that ultimately makes the room seem bigger than it really is. This would make the deductions that you're entitled to larger as well. On the other hand, if you say you have a home office that is exclusively used for business in your home and you just flat out don't everybody be in that room doing everything, That's an intentional deception, and that would fall under the description of tax fraud. Okay? Stay away from the home office deduction if it's not used exclusively for business. Another big one, incorrectly claiming the earned income tax credit. This is similar to the child tax credit. The earned income tax credit, it was designed to help provide people with the extra income that they need for essential purposes. So in 2023, meaning this year, like you file your taxes this year in 2024 for the 2023 tax year, the credit will vary. It is between $600 and $7,430. That depends on your filing status and the number of children that you have, your kids, not nobody else's kids. This is another one of those tax credits where the IRS is very, very clear about who qualifies, who doesn't qualify, and what amount you're entitled to. If you have one qualifying child, for example, the maximum amount of the credit is $3,995. This is with a maximum adjusted gross income of $46,560. So if you don't fall into that defined bracket that's provided to you by the Internal Revenue Service regarding who can claim the credit and who can't, just don't do it. If you do, you can run in risk of tax fraud. The last one that I want you to really be mindful of, and this is another new popular one, is failing to report crypto income. Yep. Bitcoin, all that good stuff. So over the last few years, people who fail to report cryptocurrency income on their taxes, it has become a major issue with the Internal Revenue Service. There has been a lot of talk about whether virtual currency qualifies as income or at all or not. Well, the IRS has decided that it does, which means what? It is. So you have to claim it, whether you like it or not. I don't make the rules. You don't make the rules or the laws. The IRS does. We have to follow them. If you don't report transactions on your income taxes and you get hit with an IRS audit, not only will you have to pay interest on the money that you owe, but you'll probably have to deal with penalties and potentially criminal charges in some cases. And it's just not worth it. It's not worth it at all. I know cryptocurrency is new. If you don't understand how it works, and if you don't understand if you should be adding that income on your taxes or not, you should not hesitate to enlist the help of a tax professional. Getting help from a tax professional can help you avoid audits. A lot of time, not all the time, a lot of times it does. Make sure that that person that you're seeking help from is educated on tax laws, because not everyone that prepares taxes is educated on tax laws. Okay, there you have it. Those are my popular ones that you need to look out for. To find out more information about all the common tax mistakes that can get you in tax trouble, or if you just want to chat and you need a bit more details about whatever tax issues you're having right now, please don't delay. Contact me today. www.mjtax.com, or you can find me on social media, on all social media platforms, Melinda Tolbert. Until next time, I will talk to you all soon.